Hello and welcome. In previous lectures, we saw the introduction, structure, and we took an overview of the Indian money market. We saw how money market functions. We saw what kind of institutions are there in money market. From today onwards, we are going to start a new topic called Indian capital market. In this lecture, we'll be taking the introductory part of this capital market, and then forward, I'll be teaching you different types of capital market and the institutions which are working under capital market, different concepts of capital market, and so on. Okay, so just let's start with the meaning of the capital market. As I've mentioned here, capital market is a market where buyers and sellers engage in a trade of financial securities like bonds, stocks, etc. The buying and selling is undertaken by participants such as individuals and institutions. See, here capital stands for the money figures. Okay, in economical terms, we do have some different meanings of capital. Capital stands for the commodity investment made by the industrialist in their own plants. Capital stand for the money investment. Capital stand for the physical investment also. So, but here we'll be just talking about the money investment, and it will be referred as the capital. So capital is something which is used for the investment purpose. Now here in capital market, we can see some different types of and different tools of investment. Here we'll be discussing two basic tools, that is bonds and stocks. Now what is meant by bonds and what is meant by stocks? As you are aware about the stock market and stock exchanges, I need not to tell you about a lot about stock market, but to give you in the brief idea of stock market, I'll say that stock markets are nothing but the virtual places or the places where the trading of the stocks takes place of different kind of institutions like different companies and different firms who are willing to raise some new investment without losing their or without going for the bank or going to the bank for these loan kind of processes. Here stocks are different than the loans, but stocks are nothing but the people who are investing in the stocks are getting the legal partnership in those firms. Okay, so hence you can see those companies who have listed into the stock market, they will be referred as the public enterprises, isn't it? And bonds are something that the um, flows into the market with some face value in it and the flexible interest rates. Okay, that will be discussed in coming lectures. This was just an introductory part of the Indian capital market. To explain the capital market in the words of J.S. Peters, he refers is that it's the widest possible sense that the capital market could be defined as the being the market or collection of interrelated markets in which potential borrowers are brought into contact with the potential lenders. So capital market is nothing but the market where potential borrowers and potential sellers came together, and they have set up this market. Now it's working across the world. It's working in India also. India has got different types of stock exchanges also. That is BSE, NSE. There is a stock exchange in Pune also. Stock exchange in Kolkata also. Different cities has got different stock exchanges. But in our lectures, we'll be dealing with two main stock exchanges. That is the BSE, Bombay Stock Exchange, and the NSE, that is National Stock Exchange. Other than exchanges, there are some exchanges where commodities get traded, that is commodity stock exchanges. There are also few commodity stock exchanges, that is NCX, National Commodity Exchange. Okay, then there is a commodity exchange at the state levels also. So where agricultural and some commodities like gold, silver gets traded. But in this lecture, I'll be just talking about the exchanges where the money gets traded. Okay, so just get started. Now stock exchanges is or the capital market. Sorry, stock exchanges is just a part of the capital market. It hasn't got any special identity yet. They all come under the capital market, and the capital market is then divided into two types. first is primary market and the second is secondary market. Okay, so the capital markets are the complex institutions and the mechanism whereby intermediate term funds, okay, and the long term funds, that is the intermediate stand for the loans up to 10 years of maturity, and long term funds stands for the longer maturity loans, and corporate stocks are pooled and made available to businesses, governments and individuals, and whereby instruments already outstanding are transferred. Okay, uh, moving further, let's see the nature of this capital market, how it is made of, and uh, what kind of structure it is having now. So, capital market consists of two types of market, as I told you, primary and secondary. Now, what is meant by primary and what is meant by secondary? See, capital markets uh, has a three entity or the three party market, I will refer it. That is, first is buyer, second is seller, and third is the intermediary or the broker. Now, whenever a company wants to get listed, or whenever any company wants to sell the stocks, then it needs a broker to sell those stocks. Okay, so that third party brokers is a part of this primary market, and we all are people, like common people like us, are the part of the secondary market. Now you will say how we are the secondary people and why they are primary people. See, any company who wants to get listed on the stock exchanges will be floating its stocks through some brokers. Now those stocks will be having some face value on them. That is, let's say it's a 10 rupees per stock. Now when the stocks gets traded or they get flooded into the secondary market, it starts moving from upward to downward, or from downward to upward. The trading and the demand and supply of those stocks is such a heavy mode that the prices of those stocks gets determined based upon the supply and demand. Now into the primary market, only the floating of the stocks into the markets happens. So in primary market deals with the newly issued securities, I would say. Some securities are newly issued, some securities are pre-issued, like let's say tomorrow company like GeoMart. Oh no, GeoMart is coming up with a new kind of, you must have heard about it. So GeoMart is, let's say GeoMart is coming into the market, and it wants to list itself onto the Bombay Stock Exchange. Now GeoMart needs some money, some heavy investment. So it will list 20% of its stock onto the stock market. And when it will list itself, those stocks will be dealt by those brokers who have this kind of authority with them. Okay, so this kind of things happens into the stock exchanges and into the capital market. Now, when I refer it the stock exchanges, but not capital exchanges, please understand that the stock exchanges are nothing but the capital markets. Okay, here we are talking about the capital market, and under capital market there comes the stock exchanges and the bond markets. Now secondary market deals with in the existing securities, like shares of the MRF, shares of the different kind of banks, and share of different kind of companies who are already operating into the Indian economy. So it is made up on the basis of securities traded as the stocks and the bond market. So this is the nature of the stock market. Now let's move towards the scope of the stock market. See, the capital market is the long-term market, whereas the money market was the short-term market or the short-term period market. I told you into the money markets lecture that the securities, or the bonds or the debentures which gets traded into the money market, they remain there just for some few years, or very few period of time, that is up to the 1 year. Okay, now the debentures and those short-term securities given by the government of India or the RBI to those people for the investment, they last till only the 1 year of maturity. But here into the stock market or into the capital market, securities get traded for the long term period. Now let's say for the 10 year, for the 20 years and so on, they have some maturity date, but until that date those security will be will be having those ups and downs into the market, and so it lasts for the tens or 20s years. Okay, so the capital market is basically the long term market, whereas the capital market are the places from where the productive capital markets are raised for the company, or the productive capital is raised for the companies. See, sorry, here I've made some mistakes. Let me clear it. uh, Instead of moving the whole PPT, I will. Okay, productive capital, not market. It's only capital. Okay, so from the capital market, productive capital gets raised, and by the term capital here, we does not mean any physical capital, but the money capital only. As I told you on into the first slide itself, that capital here is something related with the money terms or in the cash terms. Okay, whereas in many economical aspects, or in many books, we will refer capital as something the heavy machinery investments, isn't it? So here I do mean, but only the money terms of the capital. Okay, so uh, into scope, traditionally the money market has been described as the market for short-term debt, but the capital market is the long-term debt market. Uh, Secondly, the capital markets are where from the productive capital raise, as I told you, and made available for the industrial purpose. Okay, so let's say tomorrow a company called Mahindra. Now Mahindra needs some finance. Now Mahindra doesn't have any option, or it does not want to go to any bank's door, or it don't want to get trapped into the debt, or the debt burden. So what Mahindra will decide, that Mahindra will decide that let's sell some of our stocks of our companies. Let's sell 20% of our stocks into the stock market, and let's raise money for our purposes. So they will list their company into the stock market. They'll take permission from the SEBI, and then after reviewing their balance sheet, after reviewing their profits, SEBI will list those companies into the stock market. Will allow those companies to list itself onto the stock market, and after listing, Mahindra will generate some kind of finance or some kind of revenue, or Mahindra will raise some kind of money for their production purposes. Okay, so here Mahindra have sold the 20% of their stakes into the market. People who have bought those 20% gets the 20% partnership into the Mahindra firm. Okay, this was just an hypothetical example. So stock markets are the places where the shares or the partnership gets traded of the companies. Okay, so capital markets can be local, regional, and international. So there are some international market like New York Stock Exchange, or the Shanghai Stock Exchange, or the London Stock Exchange. So, or the Bombay Stock Exchange itself is a international market. So these are the international market, and then there are some local stock exchanges like exchanges which are situated into the Pune, or we have a stock exchange at Nashik also, but it operates on a very low level. Okay, so thirdly, the I told you that the capital raised into the stock exchange are the capital of productive purpose capital. So, since capital markets refers to all the institutions and mechanism of raising medium-term, long-term funds, it embraces all the instruments of permanent form such as shares and stocks, bonds and debentures, and all the institutions dealing in these instruments. See, the capital market does not include only the stock market, but it does include like bond market or the debentures and all those securities which are the kind of long-term securities. Okay. So finally, like the money market, the capital market too can be local, regional, and national also, as I told you. See, in this section, I'll be talking about only the only the introductory part about the capital market. In coming lectures, we'll be discussing them in details. In next topic, I'll be teaching you the characteristics of the capital market. That is, what kind of market it is, what kind of activities takes place into the capital market, and how capital market is different from the money market also. So till then, Take care, stay healthy, stay fit. Bye bye. Thank you.